Why are some of the richest people on the planet quietly unloading their homes, stocks, and companies right now, all at once? This is not clickbait. It is happening, and it is happening fast. If you click this video because something feels a little off, you are not imagining it. When the ultra-wealthy make big moves in silence, it is rarely random. It is a signal. And if they are stepping back, even just a little, it is worth paying attention. So stay with me, because understanding what they are seeing might change the way you look at this moment entirely. Before we go any further, I want to make something clear. This video is not about conspiracy theories or hype. It is about real trends, real data, and what they actually mean for everyday people. In the next few minutes, I am going to walk you through why these massive sell-offs are happening without fear tactics and without complicated jargon. By the end, you will understand why billionaires are selling, what signals they are responding to, what most people tend to overlook, and how you can interpret all of this in your own financial life. My goal here is clarity, not chaos. When you look at what is happening with billionaire sell-offs right now, the first thing you need to understand is that none of this is new. It might feel new because every headline is louder than the last and social media turns anything unusual into a crisis, but this exact pattern has shown up over and over again through history. The wealthiest people on the planet almost always move before everyone else. They shift out of certain assets early, well before the public has any idea what is going on, and they do that not because they are magically gifted or because they see into the future, but because they have access to information the average person simply does not. They have better data, faster data, and entire teams of analysts whose full-time job is to study risk. So when something in the economic air changes, even if it is subtle, they feel that shift long before a headline ever shows up to explain it. This is why, when you track billionaire behavior over time, you start to see that their selling is rarely emotional. It is methodical, is calculated, and more importantly, it is early. Think back to the period leading up to the 2000 tech bubble. If you were paying close attention, and most people were not, you would have noticed that some of the earliest investors in Silicon Valley were already trimming positions months before the crash. They were not panicking. They were not predicting doom. They simply recognized that valuations had drifted far from reality and decided to rebalance. The same thing happened before the 2008 recession. Hedge funds that had access to deeper lending data and mortgage-backed security analysis were quietly cutting exposure long before the collapse became obvious. They were not scared. They were preparing. And that is the part people often miss. Not all sell-offs mean danger. In fact, many of them are simply rebalancing, adjusting positions before the rest of the world catches up. When you watch the ultra-wealthy closely, you are not watching panic. You are watching preparation. You are watching people who have learned over decades that the cost of being early is far smaller than the cost of being late. There's a story that illustrates this perfectly. Years ago, a billionaire quietly restructured a massive portion of his assets months before a major downturn. He did not announce it publicly. He did not warn anyone. He just shifted. He sold a few large positions in overvalued areas, trimmed some real estate exposure, and increased his cash reserves. People who noticed assumed he was being cautious or fearful. But when the recession hit, he was completely unshaken. He was not trying to time the market. He simply recognized that certain numbers were changing in ways he did not like. When someone asked him later if he had predicted the recession, he laughed and admitted he had not. He said, "I did not need to predict it. I just needed to notice the water getting cold before everyone else." That is the mindset. That is the pattern. Billionaires are not reacting to the moment. They are preparing for what the moment might become. Now, to really understand what is happening today, you have to look at what exactly they are selling, because the types of assets they exit tell you a lot about what they think is coming. One of the first and most telling categories is luxury real estate. When billionaires begin selling primary homes or vacation properties, especially in markets that have overheated, it often signals that they expect cooling prices or new tax pressures. These are not panic sales. They are strategic moves. A $20 million home is not just a place to live for these individuals. It is a store of value. And selling it at the right moment frees up enormous liquidity. When several ultra-wealthy individuals do this at the same time, it is rarely a coincidence. It usually means they are preparing for a shift in interest rates, regulation, or investment conditions. Then you have public stocks, which tend to draw the most attention. When a CEO sells significant portions of their own company stock, people notice. But here is the thing. CEOs know their businesses in ways the public does not. They know the timelines, the delays, the costs, the competition, the regulatory risks, and the weaknesses that never make it into quarterly earnings reports. When they sell large amounts of stock at once, it is almost never random. They know their ship better than anyone else. That does not mean the company is failing. It simply means the current valuation may not match the internal reality, or that they want to diversify while the price is high. The same logic applies to private companies and early-stage startup stakes. When billionaires sell their ownership early, it often signals tightening credit conditions or slowing venture investment cycles. They might love the company. They might believe in the founder. But if the wider financial environment is shifting, like rising interest rates or slowing liquidity, they will step out early. Is not personal. Is strategic. Timing matters at their scale. Then there are the luxury items. Art pieces, collectibles, yachts. These do not generate income, and while they hold value, they are not useful during transitional periods. When billionaires liquidate these items quietly, it is usually because they want flexibility. They want to be ready for opportunities that will require liquidity. These are some of the earliest signals that a shift is coming because they are the least essential assets. Wealthy people love luxury, but they love opportunity more. What makes this fascinating is how often these sales cluster together. Billionaires do not sit in a group chat and coordinate their moves, but they react to the same global numbers, trends, and pressure points. So when multiple ultra-wealthy individuals sell the same kinds of assets at the same time, it means they are seeing the same signals most everyday people will not notice until months later. So the real question becomes, what are they preparing for? And here is where things get interesting, because they are not preparing for fear. They are preparing for positioning. There are three major things they might be anticipating, and none of them are about panic. First, transitions. Economic transitions create opportunity. When markets shift, when industries rotate, when cycles change, the people holding the most cash have the most power. Wealthy individuals understand that downturns are often the best time to buy. But you cannot buy if all your money is locked inside assets that will lose value during the dip. So when they sell early, they are not scared. They are clearing the runway. Second, policy shifts and elections. Tax laws, capital gains adjustments, regulatory changes, and interest rate resets can move billions in either direction for someone at their level. Billionaires pay attention to policy in ways regular people do not, because the consequences are far larger for them. If a new administration could raise taxes, they will sell early to lock in current rates. If new rules could affect their industry, they shift capital before the rule becomes official. They act before policy hits, not after. Third, technological and economic cycles. Every few decades, a major shift reshapes the world. The early internet era, the energy boom, the automation wave, and now artificial intelligence. Billionaires are often first to reposition from aging sectors into emerging ones. They are not selling because they think everything will collapse. They are selling because they want to be in the industries that will define the next 20 years. They think in decades, not months. They are not reacting to today's news cycle. They are aligning themselves with tomorrow's reality. When you understand this, the entire picture changes. Instead of looking at billionaire selling as a warning sign, you start seeing it as a language, a way of signaling where cycles are heading. The emotional interpretation melts away, and what is left is clarity. That is the shift I want you to feel in this moment. Because the truth is that most people look at these trends and feel fear. But billionaires do not operate from fear. They operate from preparation. And this is where you can learn something incredibly valuable. Most regular people react emotionally to financial news. They see a billionaire selling and assume disaster. But the wealthy rarely view a sale as a sign of danger. They see it as timing. They look at cycles. They watch interest rates rise. They watch credit conditions tighten. They watch job markets slow. They look at the entire environment, not the headlines. If the conditions are shifting, they reposition. It is not emotional. It is logical. This is the key difference between how billionaires think and how the average person thinks. Most people focus on the headlines. Billionaires focus on the patterns. And here is the most empowering part. You do not need millions of dollars to think in patterns. You just need awareness, curiosity, a willingness to look past fear and see the bigger picture. Because the truth is that billionaire selling does not mean doom. It often means they are preparing for the next growth wave. Think of it like stepping off one boat onto another because the tide is about to change direction. It is not an escape. It is a repositioning. There was a moment during a past recession that illustrates this clearly. Two people had very different reactions. One panicked, sold everything, and tried to protect what they had by going to cash. They felt safer for a moment, but when the economy recovered, they missed the entire rebound. The other person stayed calm, looked at the cycle, and bought when prices were down. When the dust settled, the calm person was in a much better position. The difference was not intelligence. It was mindset. That is the heart of all of this. You do not need their money. You need their mindset. Preparation beats panic every single time. If you treat billionaire behavior like a set of clues instead of warnings, you will notice patterns that make the entire economy easier to understand. You will start to see what they see. You will start noticing the wind change before the storm hits. And more importantly, you will see that every shift brings opportunity, not just risk. Billionaires are not running. They are adjusting. They are not escaping. They are preparing. And once you understand that, everything becomes clearer, calmer, and more empowering. Instead of reacting, you begin interpreting. Instead of fearing change, you begin positioning for it. And that shift alone can change your entire relationship with the financial world, no matter what your income is, no matter where you live, and no matter what stage of life you are in. That is the real lesson behind billionaire sell-offs. They are signals, not verdicts. They are insights, not warnings. And once you learn to read those signals, you stop feeling overwhelmed and start feeling equipped. You begin to understand the economy not as something scary, but as something rhythmic, as something you can follow, as something that moves in cycles you can actually anticipate. And once you see it that way, you become a lot harder to shake. You become grounded. You become informed. And most importantly, you become someone who navigates uncertainty with clarity instead of fear. At the end of the day, these billionaire sell-offs are signals, not verdicts. They are reminders that the people with the most to lose are rarely running away from anything. They are repositioning for what comes next. You can do the same, even on a smaller scale, simply by staying curious instead of fearful. Pay attention, stay grounded, and remember that preparation creates far more stability than panic ever will. If this gave you something to think about, share your thoughts in the comments. I would genuinely love to hear how you are reading this moment and what it means for you.